Global oil prices are tracking low as China denounced the U.S. as a bully after the White House said it had persuaded Venezuela to divert supplies from Beijing and import up to $2 billion worth of embargoed crude. The deal was in line with President Trump's aim to control Venezuela's vast oil reserves after deposing leader Nicolas Maduro, who was accused of being a drug trafficking dictator. Well, we're joined by Janiv Shah, speaking to us live from London. He's Vice President of Commodity Markets at Rystad Energy. Thanks for joining us, Mr. Shah. Mr. Trump, if in some detail, in his social media post saying Venezuela will turn over 30 to 50 million barrels of sanctioned crude to the U.S., that money, that oil worth up to $5 billion will be sold at market prices, and the money controlled by me as U.S. president. It will be taken by ships, the oil, and brought directly to docks in the United States. Mr. Trump has an end game to these moves, but there are many hurdles in these various stages that might not be cleared. What might they be, and what might his end game be, and how might it be that he does not, in fact, reach these goals?
Good evening. Firstly, thank you for having me on. I think the ultimate endgame is for the U.S., for the Trump administration to lower prices, lower energy prices, gasoline prices at the pump for the consumers. So the methodology in getting to this stage requires an excess of gasoline supply from a domestic front above and beyond what is currently being produced by U.S. refiners. And essentially the way to do that is to increase the heavy and sour barrel consumption and upgrading potential from the complex U.S. refineries such that they can produce more gasoline. Heavy sour barrels are in short supply. They are quite imbalanced in the market right now. But light sweet barrels are very much oversupplied. So a key source of heavy sour barrels are Venezuela from the total Americas region. And I guess this is the 21st century's version of the Monroe Doctrine. But there are also heavy sour barrels that come out of the Middle East and further afield in the Eastern market. So the end game here is, again, to reiterate this, is to reduce the pump price. And the way to get this is to increase the availability of these crudes. Now, one hurdle that could be there is currently, China, well, in the last couple of years, China has been taking around 500,000 barrels a day of crude, been importing from Venezuela. Well, this number, of course, will reduce with the current latest that has been announced by Mr. Trump. But moving forward, where does this put China in terms of importing material from Venezuela? Another key aspect to discuss here is this material is being owned by the U.S. government, is the key assumption. So it will need to be sold to U.S. companies who have all remained fairly quiet since the weekend and since Mr. Maduro has been transported to the U.S. So very many assumptions in play. And very quickly evolving situation, but we are all waiting and seeing how this will all play out. But analysts' estimate reside with what we've just mentioned here.
All right, the price movements we've seen since the weekend to Tuesday and then today, what does it suggest in terms of the difficulties you mentioned actually being met?
Well, firstly, the risk premium had increased from the weekend going in up until Tuesday's trading market open, after which it had softened quite considerably, and it had been accelerated in its softening by the social media post by Mr. Trump himself. So essentially the risk premium had been put on and has come off slightly because now the US market is seeing an oversupply of total material as opposed to just light sweet barrels. Moving forward, we see this as a slightly bearish indication because the risk premium has been swallowed up and has come off significantly. So that's why you're seeing Brent dropping in just above $60, and now WTI is at $56.5 after this oversupply. We could see further discounting of WTI as it's backed out of US refineries, but we could also see discounting of Canadian grades as US mid-continent refineries continue to take these Canadian grades. But some U.S. Gulf Coast refineries substitute these with the incoming potential of Venezuelan barrels.
Well, the actual amounts involved in these moves relatively small compared to the weight, the symbolic weight of these latest moves from Washington?
Absolutely. The 1 million barrel a day of Venezuelan production is 1%, if that, of total global liquid supply. And of course, if this was to happen across the Russian front, which produces around 10 million barrels plus, that is a larger one for the scale. But this is much more symbolic effort because it is an attack, a little bit of an attack on China, essentially taking away some Chinese import material and rerouting it to the US system. So it's very much more keeping the material within the Americas, and China will also have to discuss with Brazil moving forward and how the relationship and the crude exports from Brazil to China will continue moving forward.
In terms of global prices for oil, geopolitically, the credibility of the United States as a global geopolitical actor, these moves, are they more significant than just moving 10 million barrels here, 50 million there?
This is a fantastic question, and I think much of this is up for discussion within every government around the world. But one thing is for sure is that the new US government and administration had come in with a policy of solving much of the discontentment on a global scale, on a regional scale as well. So that is one thing that the US government has been pushing for, and we will see a little bit more potential of that with the ongoing and maybe even accelerated peace talks between Russia and Ukraine. But moving forward, unlikely that there will be much of a change, but it's a very quickly evolving situation, and all bets are on.
Oh, thanks for helping us keep an eye on this rapidly evolving situation. Janiv Shah, Vice President of Commodity Markets at Rystad Energy. And CNA's Deep Dive podcast is further exploring the impact of US actions in Venezuela and what they could have on smaller nations such as Singapore. Oh, here's an excerpt.
What about here in Singapore? Why should we pay attention to something that's happening so far away?
It's important for us to make clear our stand on this issue, which I believe that our leaders have done. But at the same time, we need to balance that out with the reality of the global landscape, especially today. And no amount of crying foul can wish that away. I mean, you know, President Trump is not going to care about the global outrage. I don't think we should jump to the conclusion. Therefore, the US, China's and Russia's of the world are just going to go around and just sort of intervene or gobble up every small state that's on the map, right? I think that connection between what's happening there and what's happening in our part of the region, I think is a rather simplistic one, because the geostrategic landscapes are fundamentally different.
If I were the government in, say, Cuba, in Panama, in Colombia, in Greenland, I would be quite worried right now. But even though the threats facing our region aren't as, you know, direct or as militarily violent as the ones facing that region, the lasting impact of this raid will likely be a reinforcement of the belief that might makes right on the international stage, and that's going to be quite damaging or harmful to us.
I'll catch the rest of that on our website, CNA or Me Listen apps, as well as on Spotify and Apple Podcasts.